During the pandemic, the federal Paycheck Protection Program loaned out about $1 trillion. The idea was to save millions of jobs. But, and this probably won't surprise you a lot, some of that money was stolen by scammers. Financial fraud investigators pouring through all those loans are finding lots of businesses that had no business taking the money. Some even have names so crass we can't say them on TV. Blank the System, for example. Tonight, the I-Team's Chris Glorioso investigates some of the most absurd companies that qualified for cash and why nobody gave them a second look.
Buried in the long list of PPP loan recipients, you can find some real zingers. How about an employer called Broke Best Friends, LLC, or Money Slut Mafia? They're both headquartered in residential apartments, and they got approved for more than $27,000.
I mean, it's pretty amazing to see some of those names.
We can't say this company's name on the air. It's called The System, LLC, based in this house on a hill. The system was approved for more than $18,000.
It's another case of the federal government not paying attention where they should be paying attention.
And then there's a company called Satanic Lives Matter with offices in this house with the brown shutters. They got almost $1,500.
You're wasting the hard-working people's money, is what you're doing.
These absurdly named companies all have two things in common. They were approved for thousands in federal PPP loans, and according to business records, none of them were registered with their respective states before the pandemic. According to PPP rules, only employers in operation by February 15, 2020 were eligible. That is frustrating to Nazir Nasir. He owns Galaxy Computers in Yonkers, a small business that's been open for nearly a decade. When he applied for a PPP loan,
I was expecting like at least $15,000 to $20,000.
he got just $94.
So $94 is not my even a phone bill.
The I-Team tried to contact the system, Broke Best Friends, and Money Slut Mafia. We couldn't find any of the owners online or on the phone, and we did leave messages.
We're trying to figure out how your company got money without any record of incorporation.
Someone did pick up at the address listed for Satanic Lives Matter, but she said she never got a PPP loan.
But you don't have a company called Satanic Lives Matter.
No, I do not.
It is important to point out, none of these crudely named companies has been accused of wrongdoing, and the CARES Act did not require loan recipients be registered with their respective states. But earlier this year, the Small Business Administration Inspector General found 5,000 businesses got more than $400 million, even though they registered federal tax numbers after February 2020. Auditors said that may indicate the businesses were created to fraudulently gain access to program funds.
Every dollar that goes out to a fraudulent application is a dollar that's not going out to a business that really needs the resources.
Tom Miller is CEO of ClearForce, a company that works with financial firms to root out fraud. He says his team did its own analysis of more than 130 PPP loan recipients. He found more than 1,000 of them were run by people with felonies on their records. Recent felonies were supposed to be a disqualifier.
And half of the felons that we found, the felony crime that they committed was financial fraud.
We couldn't find any of those crudely named companies, so we asked the Small Business Administration about them. An SBA spokesperson told us the agency does not comment on specific borrowers, but stressed it is actually the responsibility of private lenders to vet and determine PPP eligibility. Nonetheless, the SBA says if anybody out there suspects PPP loan fraud, you can report it by going to sba.gov/fraud.
All right, well, a Memphis daycare owner under a federal indictment tonight after allegedly misusing money received during the pandemic. Court documents name 4 businesses owned by Nikita Kennedy. WREG's Ashley Paul joins us now from live outside the federal building in Ashley. You found that some of those businesses are still operating.
Yeah, Stephanie, well, we knocked on the door of the What About Us Child Care Center, and it is indeed still in business, even though court documents allege the owner of that business misused up to $3 million in fraudulent insurance claims and loans. Kids at the What About Us Child Care Center play on this pretend police car on the playground as a federal indictment hovers over the daycare they attend. According to that indictment, Nikita Kennedy, quote, unlawfully obtained money and other property by means of false and fraudulent pretenses, representations, and promises, end quote, when applying for PPP and economic industry disaster loans for her 4 businesses, which include the Child Care Center, What About Us Adult Daycare Center, and What About Us Home Health Care, along with the What About Us Foundation. Kennedy allegedly received more than $100,000 from the Small Business Association and another nearly $250,000 in PPP loans. According to court documents, Kennedy was not truthful on her applications about key information, including revenue and number of employees, which impacts the amount of the loan. It also says Kennedy submitted bills to insurance companies for people that were never patients and got payment for her home health care center for services that were never actually performed. They say she got away with almost $2.7 million. According to documents, Kennedy allegedly put a down payment on a home and purchased a Rolls-Royce and a Corvette with those funds and will now be required to forfeit those vehicles. The Child Care Center is operational, but online, both the Adult Daycare Center and the Home Health Care Center are listed as permanently closed. Now, I spoke with Kennedy on the phone, and she says she fully maintains her innocence. Her lawyer says that she's pleaded not guilty and that she fully expects to be acquitted once this goes to trial.
Tonight on the 10 o'clock news, a well-known and outspoken South Georgia pastor now faces the possibility of spending up to 30 years in federal prison.
Don't expect to see Mac Knight's name associated with fraud.
Pastor Mac Knight of Impact Worship Center in Kingsland was indicted on 5 counts of COVID-19 recovery assistance fraud.
According to the federal indictment, the 45-year-old used the money meant for coronavirus relief to buy a luxury car. News4Jax reporter Eric Avanier joins us live with what else the indictment reveals. Eric.
Well, for the past couple of years, Pastor Knight has appeared in many of our news stories, fighting and standing up against what he perceived to be as police excessive force, and even represented the family of George Floyd, who was killed by a Minneapolis police officer. Well, now he is the one who needs representation to fight these federal charges listed in this indictment. He was known for his efforts of peacekeeping during the uprising in Minneapolis following the police killing of George Floyd.
I think I would just offer them how to organize a peaceful protest.
And he was a spokesperson for a family mourning the death of Tony Green, who was shot and killed by a Kingsland police officer.
A life was taken all too soon.
But now Pastor Mac Knight finds himself in the spotlight for all the wrong reasons. According to this federal indictment, Knight fraudulently sought and received more than $149,000 in COVID relief money. Attorney John Phillips has no affiliation to the case, but is familiar with Knight's community activism.
It is surprising. When you have multiple businesses, you've got to run each one right. And this CARES Act money wasn't free money. It wasn't just take it and do what you want with it. It was relief.
Taxpayer-funded relief, to be exact. According to this indictment, Knight falsely wrote on an application that his tax service and his restaurant earned a combined total of more than $670,000 prior to the end of January 31st of last year. In March of that year, he got a check from the government totaling a little more than $149,000. 10 days after receiving the check, investigators say Knight purchased a Mercedes-Benz for a little more than $46,000. Phillips says this leads to other questions.
Where's the rest of the money? Did some or most go back to the business? I'm curious as to where they have him on the lies. Obviously, they have something because it went to a grand jury. But, in this country, we're innocent till proven guilty.
Now, aside from a paper trail that leads back to the pastor, there is also a criminal history of fraud. We were able to conduct a criminal background check that revealed that the Pastor Knight was previously sentenced to time in a Georgia prison on charges of fraud and theft.
As many small businesses struggled, money meant to save them went to luxury goods. According to federal complaints, that includes a Minnesota man who took money for manufacturing payroll and went golfing, a New Jersey attorney who got $9 million for fake businesses and remodeled his home, an Atlanta reality star who spent $2 million on a Rolls Royce and a Rolex watch, and a former NFL player who allegedly joined a scheme to get $24 million in federal funds. They all deny the government's charges. The Justice Department so far has charged more than 50 defendants for attempting to steal over $175 million from the Paycheck Protection Program. U.S. Secret Service has opened some 700 investigations into CARES Act fraud.
Which programs are you seeing getting exploited by criminals the most?
We see the Payroll Protection Program and then the Emergency Injury Disaster Loan Program also, which includes both loans and an advance or a grant.
These grants, up to $10,000 in upfront cash, require even less information than PPP loans. All you needed was basic information about your business and a bank account for the money to be deposited.
You didn't even have to be a very smart criminal to try to defraud this system. People were doing things like filling in the application with the names of Game of Thrones characters.
The Small Business Administration, which ran the program, later asked the banks to freeze accounts that received this money until they could verify the owner had a qualifying business. 6 banks reported nearly 4,000 cases of suspected fraud. Among those cases, some of their own employees. Wells Fargo has since terminated 100 people. JP Morgan says it identified some of its employees who unlawfully took this money, but declined to say how many.
Tonight, for the first time, we have a clearer picture on where more than $800 billion of federal money, Payment Protection Program, ended up. The money was supposed to help keep millions of Americans on the payroll during the COVID-19 crisis. But where did your tax dollars actually go? I-Team reporter Brian New has been investigating the government program over the last 2 years. He joins us from Frisco with your answer.
So the whole point of all those PPP loans was to save jobs, and the program did that. It just wasn't very efficient at it. According to a new study by the prominent group, the National Bureau of Economic Research, only about a third of the $800 billion ended up in the hands of workers who otherwise would have lost their jobs.
Billions and billions of your tax dollars.
It was a giant pot of money.
Money that was supposed to help struggling small businesses.
Yeah, it has been tough.
Money that was supposed to go towards paychecks so workers could keep their jobs.
So we believe that they were a lifesaver.
But according to a new study by a team of economists, 66 to 77% did not go to paychecks. Instead, most of the money ended up in the hands of business owners and shareholders. The study traced that money even further and found that 72% of the money flowed to the top fifth of household incomes, meaning most of the money from PPP loans went to people with incomes well over $100,000. And that's the money that went out to legitimate businesses. In the past 2 years, our I-Team investigations have found PPP loan fraud was rampant. Millions of dollars from the program ended up in the hands of fake businesses and was used to buy fancy cars, houses, even trips to Vegas.
You'll never get it all back. There's a lot of harm these folks did. It wasn't just stealing the money, but stealing the opportunity for another business to actually remain in business.
In many ways, this was all predictable. The study concluded that prior to the pandemic, the U.S. had no system in place that could target the most needy Americans during emergencies. So instead, the U.S. flooded the entire small business sector with money. The report notes it may have been necessary only because the U.S. was not prepared.
So I want to throw one more number out there from this report that really speaks to how inefficient this program was. According to the report, for every job saved, it costs you, the taxpayer, $170,000 to $257,000.
New tonight, luxury cars, million-dollar homes, and cash hidden in the Middle East. A Mesa couple is now headed to jail for COVID relief fraud. Good evening, and thanks so much for joining us for 12 News at 6. I'm Cuddy the Divine.
I'm Mark Curtis. The feds have been cracking down on fraudsters who illegally obtained an estimated billions of dollars in loans from the Paycheck Protection Program. Team 12's Bram Resnick has the details on a couple who went on an international spending spree with your tax dollars. Bram?
Yeah, Jason and Kimberly Coleman had no employees, no real businesses, but they kept applying for PPP loans, and they got them. The Paycheck Protection Program was supposed to protect businesses and workers from the pandemic. But PPP loans also line the pockets of countless crooks with your tax dollars.
What didn't happen was even minimal checks to make sure that the money was getting to the right people at the right time.
A Mesa couple, Jason and Kimberly Coleman, have been convicted of going on an international spending spree with paychecks for phony workers. According to prosecutors, the couple filed bogus IRS forms. None of their more than 600 employees at 11 companies existed, yet their banks okayed loans worth $13 million. Prosecutors documented that millions of those PPP tax dollars were laundered in dozens of transactions. The couple put down $7 million cash for 2 palatial homes in Mesa. They had 2 residences on the beach in Rocky Point. They paid 6 figures for their cars, a Bentley Bentayga, a Rolls-Royce SUV, a top-of-the-line Cadillac Escalade, and more. And they stashed $1 million with a global investment firm's office in the Middle Eastern Emirate of Dubai. Jason Coleman was sentenced to 5 years in prison. Kimberly Coleman will be behind bars for 10 years. So how could this happen? Investigators are pointing fingers at the gatekeepers who handled the loans and profited from them. One of the banks that worked with the Colemans is being investigated by the feds.